Make the wrong move in 2025, and it could cost you everything. Is the housing market about to crash? Or are we facing a once-in-a-decade buying window? The market's shifting faster than a viral stock rally, and your timing could make or break your future. The real estate market is shifting faster than a viral stock rally, and if you make the wrong move, it could cost you thousands, if not more. Mortgage rates, home prices, and market trends. Today we break it all down in a way that's easy to understand, and even a little fun. Over the past decade we've seen rock-bottom interest rates, a frenzied pandemic housing boom, and now, a market slowdown. But what's next? Will 2025 be a buyer's dream, or a financial nightmare? Some experts predict a market collapse, others insist home prices will hold strong. So what's the truth? The answer isn't black and white, but we're here to help you figure it out. Grab your coffee, settle in, and let's dive deep into the reality of buying a home in 2025. Is 2025 your year to buy a home? Or are you waiting for a better deal? Double tap if you're still deciding. Think the housing market will finally settle down in 2025? Think again. This ride's just getting started. Mortgage rates might cool off a bit, but forget about those sweet 2% deals from 2020. Meanwhile, home supply is tighter than front-row tickets to Taylor Swift, and builders still way behind. In cities like San Francisco and Denver, things are finally cooling. But in Miami and Austin, prices are still on fire. Why? People are fleeing to lower-tax states with better job markets. That migration is shaking up demand, and making the market harder to predict than crypto prices. Here's what it means for you. Real estate isn't one-size-fits-all. Some areas are dipping, others are locked in bidding wars. Local job markets, taxes, population shifts, these shape home prices way more than national headlines. So before you make a move, remember, your local market is what really matters. Key takeaway: trying to time this market, you've got better odds winning at poker blindfolded. Think home prices are safe? 2025 might shock you. Some buyers are hoping for a dip. But what would actually cause prices to fall? Let's break it down. First, a shaky economy. When the economy slows, people start worrying about job security. And buying a house drops way down the list. Less demand equals fewer buyers in the market. Second, stubbornly high mortgage rates. If rates stay up, that dream home turns into a monthly payment nightmare. High borrowing costs shrink budgets and push buyers out. And third, creeping foreclosures. They're still low overall, but if they rise, we'll see more distressed homes flood the market, which could drag down prices in vulnerable cities. Experts say cities like Phoenix and Boise, where prices soared, might be headed for a healthy correction, not a crash, but a step back to reality. But let's be clear. Back then we had today's market, stricter lending, stronger buyers, and tons of equity. Still, if too many sellers list at once, even strong markets could dip. Key takeaway: a slowdown? Absolutely possible. A total collapse? Highly unlikely. Think the housing market's about to crash? Or will prices explode again in 2025? One move could save, or cost, you thousands. Let's break it down. First, some perspective. Housing crashes don't happen as often as people think. The last big one, 2008. Before that, decades of steady growth with only minor dips. Unlike stocks, real estate tends to recover faster and fall slower. It's not a get-rich-quick game, but it's not a collapse-every-decade disaster either. Now, interest rates. If rates stay high, buyers will keep pulling back and demand may cool off even more. But if the Fed cuts rates later in 2025, a surge of buyers could flood back in, and prices may spike again. Here's the problem: affordability. Even if prices drop, high rates can still freeze out buyers. Let's break it down with real numbers. A $400,000 home at 3% equals $1,686 month. A $350,000 home at 7% equals $2,329 month. That's a cheaper home with a bigger payment. So even if home prices fall, borrowing costs could keep homes out of reach. Key takeaway: trying to guess the market is risky. But staying informed, that's the smart move. Because whether it's a crash or a boom, 2025 is a year you can't afford to ignore. Still waiting for the perfect time to buy? One decision right now could save, or cost, you thousands. Let's break it down, once and for all. We've looked at both sides of the market, now it's time to figure out what makes sense for you. If the economy weakens, home prices could drop, especially in overpriced markets or if foreclosures rise. If mortgage rates stay high, demand may cool further, causing a slow decline in select areas. If inventory stays low, prices might hold or even rise in high-demand cities. If big investors sell off properties, we could see more listings and more opportunities for buyers. Buy now if you find a home you love within your budget. You're in a high-growth city with rising prices. You plan to stay at least 5 years. You want to lock in a rate before it rises again. Wait if you believe rates will fall soon. You're in a cooling market. You need time to save more. You're flexible and can monitor the market. One last thing. Home ownership equals sign more than just a mortgage. You'll need room for taxes, maintenance, and repairs. Renting? That's getting more expensive too. So buying sooner, with a solid plan, might still make sense. Key takeaway, there's no one-size-fits-all answer, but if you know your market and your finances, you'll make the right move. Are you team buy now or team wait and see? Tap like or drop a comment below, and stay ahead of the 2025 market with us.